when you learn how to become a seller during volatile times, it's like becoming a casino owner when all of the gamblers show up with a bunch of money in their pockets and are on their fifth brewski. So this is prime cha-ching cash register environment when you know how to use it.
Like for me, my cash is my kind of buffer and my protection. I'm not really using options to try and profit during volatile times.
I think really all we're talking about here is volatility is inescapable. And even when you were talking about real estate, you know, I grew up naively thinking real estate is the one thing you could invest in, right? That holds its value.
I think that's like the value of the dialogue. And that's what our Patreons seem to love. Like, buddy, if you don't like that and if you think we're liars, like, go find some other channel to troll, right? For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the deep investing jungle with your hosts, Luke, the Badge Badger, and Christoph, the Monkey. This week, Badge, the bear is back and you're gonna be in trouble. The bear is back. So the markets are up and down all over the place. We'll talk about what that means. Monkey has a lot to say about his new obsession, Oddity, ticker symbol ODD, and why he's putting in a lot of work from all different angles. Gold breaches 5,150 amidst geopolitical chaos while Bitcoin continues to slide. Is crypto indeed a scam? Is it broken? And Badge, is this the end of US exceptionalism? How'd I do for my first hosting, taking over the intro?
Awesome. Very good. Yeah, we're sharing the duties. You put like some song lyrics into the intro this week, so I thought you better sing them, not me. I broke my voice yesterday singing like karaoke in the car.
I thought you were unusually enthused on our WhatsApp channel at 2 a.m. I thought there might have been some karaoke shenanigans going on behind the scenes.
We're having a lot of fun. We're coming to the end of ski season, so with the gang, and now my focus is on Vegas as the next thing. So I've got a couple of weeks, just me ski out the last few weeks of the season, get the poker skills tuned, and then I'll be meeting you and a bunch of our lovely Patreons in Las Vegas for the inaugural Wall Street Wildlife live Patreon meetup.
So it's really happening.
It better be. I spent enough time on making merch. It better be happening.
Oh yeah, we got some goodies. We got some good goodies for our crew. Can't wait to see everyone live. Yeah. So in other news on my end, Badge, I've been working on a secret project of my own as a add-on and integrated part of the Wall Street Wildlife University options course. So I can't wait I haven't said anything about it yet, but it's turning out, I think, really, really nicely. So I can't wait to share it with you.
Just another co-creation of you and your best buddy, Claude.
It is a co-creation of me and my 20 buddies. I've surrounded myself with 15 monitors, and I'm back in that madness stage. I did actually, technically. I migrated Samantha, who is my OpenClaw, from the Amazon web servers to a Mac Mini this weekend, which took me the better part of all weekend, and it was very painful. They said it was going to be easy. It was not easy, the migration. But she's now all mine.
Make sure you're careful with the data that Samantha has. I suggested one possible doomsday scenario when we spoke after the episode last week. Don't fall foul of that.
Yeah. I just I gave her all the keys, all the passwords, all the bank accounts, and I said, go forth and make me a rich man.
Go forth and F me up. Yeah, exactly. Well, while Samantha's busy potentially effing you up, the world is effing itself up, and we're yet again back in a time of wild, chaotic geopolitical instability. So what does this mean for investors?
Well, I just want to start with the obvious point for me as I get, I've been thinking about options nonstop for the better part of a long time now, it feels like. So public service announcement, when you actually master the different directions that options can work in, you get excited when the market becomes volatile. I want our listeners to take that in, because I imagine most people are not in this camp. They see the futures, everything is red, everything's dropping by percentage points. The volatility index right now, Badge, is, at least this morning, was somewhere around 32, which means, technically speaking, that the market now expects daily moves of 2%. When it's around 16, that 16 equals 1% moves, so 32 equals 2% moves. And one of the main things I teach in the university is that all of that is literally a measure of options trading. And when you learn how to become a seller during volatile times, it's like becoming a casino owner when all of the gamblers show up with a bunch of money in their pockets and are on their fifth brewski. So this is prime cha-ching cash register environment when you know how to use it. So public service announcement over. Do not let market volatility trick you into thinking it's only down and bad.
Good, great, good for you and your options buddies. But what about us like boring old stockholders clinging on? Like, for me, my cash is my kind of buffer and my protection. I'm not really using options to try and profit during volatile times. And like, yeah, I don't invest in commodities. I'm not really interested in the price of oil, but that certainly impacts the rest of the market. I've got friends who are gold bugs, and they're delighted with the trajectory of gold. As you said in the intro, like gold way above $5,000, like into serious up territory. And at the same time, like the Dow Jones down over 1,000 points. The S&P is now down year to date. So if you're not using options to protect yourself or even to profit from times like that, probably quite painful time right now as an investor. Oh, and by the way, for anyone who thought that crypto was going to protect them, crypto ain't protecting you. Like, Bitcoin is down very seriously. It's essentially trading like a tech stock while gold continues to appreciate. So yeah, if you're not a gold bug, where do you run for safety?
Badge, a couple of things. I noticed our man Beaver posted a couple of things, and he was envious. So he was trying to make other investors envious of your cash position, which is something that was at 24.7%, if memory serves.
It was. I started buying a little bit of stuff, so it's down a bit, but yeah, it's north of 20%.
Yeah, I mean, that's a really enviable position to have in a moment like this when everything's blowing up. So good on you, because that's really smart. That's sort of, if thinking out loud, if I had mastered options and I had a big cash position, this would be, but I'm all out of cash.
I mean, because if you rewind, I don't know, 6 to 9 months, that's when I go on this podcast. That's when I started raising cash. And that's when I started saying things like, I don't know when the ass is going to fall out of the market, but I know it will one day. And so, don't copy what I'm doing, but maybe you want to think about doing the same thing. So, listen to us. We do say some smart shit from time to time, and occasionally we get our timing about right.
That's right. Yes. Back to the crypto stuff. First thing that came to mind, Badge, is this idea of store of value. it feels funny to me in a moment like this. I know that that was the shingle in front of Bitcoin, which, as you pointed out, when the Nasdaq drops 50%, that theory seems to be null and void. But then I think, well, what asset in the human universe has acted like a store of value without qualification? Gold, right? As per your, I mean, gold is more volatile than it's been. I think I'm trying to say, because money is an invention in the story, other than hard assets, do we have anything that could legitimately be called store of value, by definition, something that really doesn't change its value? I mean, Bitcoin over the large trajectory is a appreciating asset, and it's done so hugely. I guess I don't, if I really wanted my money to remain stable, right? That's what investors want. Then what? You would initially also think bonds, but then bonds had a disastrous year. Right? The majority of crypto stuff is shenanigans. So that's not what I mean. That's not what I talk about when I talk about crypto. So that's obviously a circus. Silver's had all these huge, So my question to you, I suppose, is, is there any store of value anywhere?
Property, maybe. Like, I'm not a real estate guy. I did have a couple of investment properties for a while, but like, it was nothing like passive income. It was a pain in the ass, frankly. So I don't now. They're not making more land, as the property guys will say. So I guess that's a store of value. But there's no place of safety, right?
Right. So, and even cash, obviously, is being debased by, depending what government makes more of itself. I guess if we're going to make this a little bit of more of a Bitcoin segment, which I'm prepared to do, I would say the problem with Bitcoin recently is that there's been a lot of backdoor manipulation that we've discovered. So that volatility stuff is because there have been bad actors involved, and this is why we can't have nice things, because some human being is going to try to corrupt the process. But theoretically, I'm still holding on, Badge. I'm saying, because it's literally an asset class that cannot be inflated and has the scarcity component built into it, then the ups and downs that I guess are inevitable because markets are volatile does not mean that the concept of storing your value in using this asset is void. I don't know if that's a contradiction in what I'm saying. I think maybe, let me re-say that. Just because it goes up and down does not mean it ought not to be used as directionally as a store of value over a very long time frame. I don't see that argument being invalidated.
So, as I always say, I'm not a crypto guy. Like, if I were to try and answer this question, like, where are you safe in like a crisis? And it does come down to like your ability to withstand the volatility. If you can handle the swings, to me, there's no safer place than in like the price setting companies, the ones like the hyperscalers and the established, the Amazons and the Googles, and the companies that provide services that we all continue to need in a crisis and in like volatile times. And their stock prices are going to like plummet along with the crazy wild companies that are going to fall apart when like macro gets super tough. But these companies are just like, I sort of hesitate to say bulletproof, but they're incredibly robust. And, they have survived massive economic downturns in the past, and they're almost like certain to survive like the next economic downturn, even if some of them may not be here in 20 years' time. Yeah, that's where I kind of run to.
Yeah, I mean, technically, I think we're talking about, store of value is a theoretical concept, and then the practice of what should you invest in. It is why the dividend, investor income route is a reasonable one, because those kinds of companies will be less volatile over time. I think really all we're talking about here is volatility is inescapable. And even when you were talking about real estate, I grew up naively thinking real estate is the one thing you could invest in, right? That holds its value. But anybody that, what's the great mortgage crisis about, right? Overinflated real estate values.
Right.
So there's nothing, right? There's really nothing that does not or potentially could not drop massive amounts of percent. My point about Bitcoin, though, is that I suppose is that despite that, it does have this built-in scarcity feature, which over time should, as long as people believe in it, should solidify its demand because it can't be inflated. So yeah, maybe we're spinning our wheels now. You did mention Chainlink briefly. I want to say that for the 20 billionth time, crypto is not a useful category anymore. You have a couple of projects that are worth examining, and it's more like software tech, because all of it is code anyway. And when I invest in Chainlink, I do not think I'm investing in crypto. That is not at all what it does have these incredible security features built in because it's cryptographically proven and it's decentralized. But other than that, it's an upgrade for the future global financial system. That's not crypto the way I understand it. The fact that it's down, right, that also makes sense because the legal framework has not yet been passed. So all new things, edge things, are being sold.
There's I want to come back to it later in this episode, but there's a Thomas Chua tweet that I'd like to apply to your Chainlink conviction. But anyway, I'll just put that in your head.
Let's do it now.
I saw this from Thomas yesterday, I think. Thomas is at Steady Compounding on X. And I really like this tweet. Just to read it, if you're not on the YouTubes. Some investors don't own a stock. The stock owns them. They made it their entire personality and identity. So when the thesis changes, they can't confront it. Being wrong feels like a personal attack. And he goes on a bit. It's like reminded me of the Brad Pitt quote in Fight Club, about like, you don't own your stuff owns you. But I said I'm gonna call you out on Chainlink. I own Chainlink now on the back of your conviction. And do you own Chainlink, or does it own you? Like, is it now like living rent free in your head, and you cannot divest yourself of the idea that it may not be the future of like currency?
So you call me an ostrich?
Yeah, maybe.
Good question, Badge. Let's see as I try to ramble my way to an answer. I don't think it owns me because I continuously check the thesis, and the thesis has never been stronger, ever. So in this moment, what we have is it's the price that is bad. And so I feel like there have been many people who have sold and have, call it capitulated. And then there are other rah-rah bulls, that are talking about, the way this is going to take over the world. I don't think I'm in either camp. I'm holding because I've done such a stupid amount of research over many years, and things are only getting better, fundamentally. So selling would be a mistake. That would be a classic buy high, sell low, even though technically I'm up on it, but that's irrelevant. So that's not an option. I'm not. When was the last time we really talked about it? It's been several months, maybe since Daniel, our interview with Daniel. And I know all I've been doing is tracking, the public discourse, which is that the bill is now the furthest it's been in the legislatures. House, because they work basically banks. There's a lot of negotiation going on with banks because banks, unfortunately, Chainlink is going to cut in to banks' profits because what Chainlink enables is more efficient than what banks do. So there's an obvious fight. But does that sound to you like this thing owns me, or that I'm just monitoring and not panicking? And
Yeah, to be fair, the latter. Like, I kind of buy the fact that, you don't own it because you own it. You own it because you believe certain things about it. I do, I believe that you are revalidating those things. As long as you're honest with yourself and you really are, you're not just like constantly doing confirmation bias, then yeah, I guess it's okay. I think it's a good question. It's a good comment from Thomas, because we should all, as investors, ask ourselves this question, like, do I own Alphabet just because I became like the Alphabet guy years ago and I can't kind of, divorce myself from that. Maybe I've got some history because I was the Shopify guy for a long time, even to the point that like other folk on X were like, oh, talk to Luke about Shopify. And now, I'm no longer a Shopify guy, and maybe I will be in the future, but, I kind of said, well, like the world changed and the model changed, and, I no longer believe that to be a market beating holding. Turns out I was wrong. It was market beating, but, I was able to change my mind.
Yeah, no, this point is great. I think the general point is great. If anything, I could be the EOS guy. Because I've been talking about it for so many years. But as per our last podcast last week, I think, I rewatched it. I think we did a really good job in working through the negatives. Now, could I be found guilty of, let's say, leaning more heavily, weighing the optimistic side more heavily than the bear side? Yes, and that does come with the territory that if you really believe in the future of a company, it is harder, I think, to equally weight the bear and bull. So in that sense, I could say I'm guilty, though. Does that mean that I all of a sudden take it personally if, EOS goes down or management screws up? Hell no. I was as mad about the what the shenanigans as anybody. So that is a fine line. And it is true, at least in some investing circles, people are now making their names as personalities. They're screwed in many ways, right? The moment things turn, their whole reputations are shattered, potentially, right?
Yeah, totally.
And actually, you know what? Let me say, now that I think of it, there's another habit that I've seen recently that I felt irks me. I've seen a bunch of people trying to make their name by saying, I bought Palantir when it was 13, right? That kind of thing. Therefore, everything I say now about all future equities is going to be, I'm going to have 100 baggers left and right because I'm the guy that found Palantir at 13. That's such a fallacy. It's marketing, sure. Maybe they found it because they did skillfully, they did do a lot of research. I'm not taking that away from somebody. But they marry it to the identity piece. I'm the guy that found Palantir. That's, yeah.
Yeah. Maybe we don't play the game as effectively as most, which is why we're still a pretty small podcast. Like if we really wanted to, make those kind of wild claims, we probably could. And, maybe that would escalate our audience faster and, the podcast would become bigger quicker, but it's just not the way I want to grow. Like, I think you and I are honest investors, and we're honest with our Patreons and with our listeners, and we make mistakes, and it's like a lifetime journey. So that's the way we're building and growing our audience, kind of ethically, I think.
That's true. And, pulling back the curtain a little bit, we had a discussion about how to make engaging thumbnails around the, especially EOSE episode last week. And I think to my credit, some of those clickbaity ones where it was something like, I was calling out EOS for being liars, which is a thing I had to work through in my thought process. But we did not choose to make that an image because that's the whole marrying. Yeah, it's too close to being dishonest for the sake of.
I've got that clickbaity one scheduled to go live on YouTube. It's like tomorrow, I think. Should we just deschedule it and fix it? What is it? A/B test it? It's an A/B test.
Oh, you just want to A/B test it. Actually, you know what? Hey, you know what? As long as this segment goes live, right, where I'm saying this is why I would be uncomfortable about that kind of marketing gimmick because of the personal things, and then I'm okay because there's the transparency is there. But then I would be curious to see just how much better something like that performs over the more moderate and thoughtful take. So we could run it, and then I'll point people back to this.
Okay, that's fair. Maybe this is a good point to jump into a comment we did get on the YouTubes a couple of days ago. And I've titled in the docket, I've titled this bit, do not respond to the YouTube trolls. I think let's just be transparent with it. So we posted like a short about maybe 2 or 3 months ago, and it was a conversation you and I were having, like a sidebar conversation about Elon Musk and like various holdings. And then, so a chap said, don't listen to this guy. Look at all the companies Musk has built. This guy is telling you he doesn't trust, but at the same time, you're not watching what his hands are doing. He's buying Tesla. He's buying SpaceX. This guy is a liar. And I went, it made me a bit furious. I went on the attack and just said essentially, there are two of us on this podcast and we have different holdings and we have different opinions. And the value of this podcast is we're kind of transparent in challenging each other. And we are two hands because I do own SpaceX. We both own Tesla. If I could buy like boring company Neuralink and everything else, I'll be buying those too. They're just not available. And you're entitled to your counter opinion. I think that's like the value of the dialogue. And that's what our Patreons seem to love. So like, buddy, if you don't like that and if you think we're liars, like go find some other channel to troll, right? Go disappear down your own confirmation bias rabbit hole and don't seek conflicting opinions because we ain't for you.
All right. Oh man. I really don't like this take. One, it's actually for stock like SpaceX and Tesla, for the idea that any retail would somehow cause some sort of brand damage. Like, oh, Badger took off 150 billion off the market cap because he doesn't trust. Right? That's just, that's silly on that level. But the other point to counter that is there are bad actors in the financial world where, especially with lower liquidity stocks and that's why pump and dumps get a bad name, right? And I know personally a bunch of people in this camp where you you buy options behind the scene, and then your other hand is actually doing something else. You're already selling after, right? That is, I think, ethically challenged, to say the best, and immoral, to a great extent. So it is a thing,
and actually illegal. Like if you do have enough of a Twitter following, and if you are able to move like the price, then that is illegal. That's market manipulation, and you can go to jail for that.
Right. So I think in this way, this poster is right to say there are shenanigans that take place.
Sure.
And watch out for those kinds of characters. But I find zero contradiction in saying Musk is a weirdo that says a bunch of stuff that is either factually stretched or outright deceptive, and saying we believe in this company because he's also one of the world's, best entrepreneurs of all time, blah, blah, blah. Where is the lying in that? It's just the inability to hold two contradictory views at the same time, and getting all, your panties all up in a bunch when somebody critiques something you happen not to like. Is that what's going on here?
I know. Yes. I mean, it's a moronic comment. Some people, they're armchair warriors, and they want to sit around and like throw accusations at YouTube channels, and that makes them happy. Then fine, go enjoy like your circle jerk afternoon being a troll. But whatever. It gave us a good opportunity anyway. So thank you, Bra Logic, because you gave us an opportunity to tell you why you're wrong and why why we have our listeners' best interests at heart.
Yeah, I mean it's what we do in this shop badge. I've been my jiu-jitsu game has been I've been up and up my practice. So if this guy wants all right, badge. Is this the end of U.S. exceptionalism? I found this a fascinating chart. What it shows you for our non-YouTubers, starting from 2007, 2008, there's a line that looks to be going straight down until about year 25. There's one line drawn basically showing you that this line directionally is consistently down and to the right, basically. From a technical standpoint, you would call that line showing a resistance channel. And then the catalyst here is that as of late 2025 into 2026, that downward channel slope has been breached to the upside. And the thing being measured basically is the value of non-US stocks versus US stocks. And so merely on the technical front, this is what would be called a breakout, that all of a sudden the buying pressure has reversed a trend going on now for, 26 years? 20, what's the math? 18 years.
Excuse me.
And I, for one, find that valuable to see.
It's interesting. It makes me a little frightened, quite honestly, because, I may have started investing in like the early 2000s, but, I was really investing in like US growth stocks from like 2006. That's when I bought Intuitive Surgical. So actually this chart is essentially my investing career. And I've beaten the market handily because I've been like US focused. Maybe I've only beaten the market because like the US has beaten like the rest of the world handily over that same time period.
Well, I think we have two theses we could go back to, Badge, is one, this is why we got interested in India. What was it, like a couple of years? The interview we did with the analyst that lives in India. Yeah. Our listeners should revisit that if they missed it. I think it's still relevant. There are other pockets of the world where things are seemingly undervalued based on the growth rates. So this does make me interested in checking out different opportunities more than before. And also, I still go back to what country on the planet has the most superior tech in this new AI revolution. Meaning the rich, the rich tend to get richer. And as far as I could tell, there's only two competitors on the world stage. And so you would kind of have to say the US has lost its technical capacities to completely like sell out or, go hunting elsewhere. But
which I suppose kind of clearly isn't the case. Like you still got some of the world's greatest tech talent either in the US or working for US companies. But at the same time, no, the other, you didn't say the name, but China presumably is what you were thinking as like the two great technological powers here. But China's hard to invest in as a outsider. You can technically invest there, but to really understand that system, I lived in Hong Kong for a couple of years, and I speak very, very bad Cantonese. Like as a Westerner, I feel like I understand at least like Hong Kong well. Do I feel like I understand China? No, not really. And I think I've made some mistakes in sort of pivoting some of my portfolio to China probably way too early.
You know what the conclusion this might lead me to is that maybe AI adoption by the rest of the world will help them accelerate the rate of their own development such that the extent to which they are undervalued now starts because of the place where they're starting from, the lower valuation, then that's what's going to make the relative comparison between the rest of the world and the US more profitable in the rest of the world segment. AI as the catalyst, if that makes sense. And so I think maybe we should talk to, the dividend investment guys again. Maybe we should hunt around for more global opportunities. I was bouncing around Poland for a little bit, looking for something, never quite found something that really captured me. But at the same time, we have something like Nintendo, which, I don't even know how to classify that. Like, that's Japanese, obviously, Japanese based, but it's also global and it's obviously US centric. So I don't know, in the chart like this, is that team world or is that team US or is that even not?
It's team world because it's not on a US index, right? It's on the Tokyo Stock Exchange, I think.
So technically it's being measured right in the world. Yeah.
Yeah, I'm as a sci-fi techie guy who gets excited about innovation in the future, I find it hard to get excited about stuff outside of America because, anecdotal experience, I do some venture capital stuff like angel investing stuff. One of my more successful investments was like a British startup who had some really interesting kind of techie capabilities around like 3D visualizations, and like my investment exited really nicely because they got acquired by Snapchat like way back now. And that's what happens, if you get like a promising tech startup, these American giants, US giants with their huge war chests, they just like go out there and they acquire them for either their talent or their technology, and then the non-US company is no more, or at least the best of the non-US stuff is no more. Happened to DeepMind, right? They got acquired by Google and like now absorbed into like Gemini and the whole kind of YouTube algorithms and everything else. So so I find it, essentially, cut to the chase, I find it hard to get excited about investing in tech outside the US because if it's really exciting, it's probably going to get acquired by a US company anyway.
Yeah, the US, all the world leaders would have to really screw the pooch pretty badly to lose the leads they have now, for better or worse, in terms of equality. Badge.
What's the takeaway?
I have a lot to say.
To answer the question, is it the end of US exceptionalism or what's going on? You're the technical trading guy. Your resistance line just been breached.
I think I already answered it. So let me restate by saying that breach of that trend line has, instead of making a conclusion, like this is now going to reverse, I'm saying I am now incentivized to pay more attention to the global equities market. And I think that is a more reasonable interpretation of something like a technical breach, which is that a good enough answer for you?
Yeah, fair enough. Yeah. Maybe you'll become a correct
because that's
shareholder.
This is a perfect segue. Now, I think to the next topic I really wanted to talk about. We received a comment that, oh boy, I've been wanting to talk to you about this. A viewer asked, what happened to the technical trading on Oddity? It dumped 50%. And immediately I felt like that this is, you could read this question in two very different ways. My honest opinion is that this was intended to be a troll-ish like question. Like that's the main read, which is like, let me translate it to saying, oh, you people who do technical analysis, right? You said you drew your lines and you used your crayons and you put your lines here, and lo and behold, next day it's down 50%. How useless are your crayons now, huh? Right? This is a little bit of a bugbear for me because I think the bias against technical analysis, in part due to a lot of bad actors in the technical analysis world, they interpret the charts as though they are prognostications and like future telling, right? Like no different than a witch would around her cauldron, cast spells saying this is how it's going to be. But that is a simplistic and naive way of looking at what technical analysis does. There is no chart in the world, let me say for the 1000th time, that predicts the future. Obviously. What technical analysis actually does is it objectively lets you see where there's supply and demand levels historically. It in no way says when a fundamental event happens, like what happened on Oddity's latest call, that the sellers would not all of a sudden show up and dump the stock, because that was an unknown. So it's in bad faith. If you're looking at technical analysis in bad faith, the critique really is, the legitimate one is, stop pretending like you're going to know the future. Because nobody knows the future. That's fair. But then when a fundamental event arrives, and of course, in this case, the support level was breached, obviously, to all-time lows for fundamental reasons, I don't think there's anybody in their right mind that would say the technicals never said this was impossible or this wouldn't happen. All the technicals said were the previous line of where buyers showed up, where when I drew my yellow line on this chart was around the $32 level historically. So that signaled a pretty decent level to enter given what we knew. Does that sound, on this level, does that sound like a fair assessment of this first level of attack?
Yeah, I was the guy saying it was the witches and the cauldrons and the casting the runes. And I sat your options course, and at least in cohort 1, there was like a whole 2-hour segment on technical analysis. And that kind of turned me around. Like, I won't use it, but I now understand what these lines and charts really mean, and why resistance levels are, they reflect reality in some way. So yeah, I get it now.
Okay, great. So now let me read this quote the second way, which I think is more in good faith. If it was more of a genuine question, like what happened to the technical trading on Oddity, the answer is, very briefly to those of you who missed my summary last time, this company, which I think has absolutely terrific financials, positive margins, positive revenue growth, positive cash flow, blah, 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 got hit by some kind of, call it technical algorithmic mismatch between their advertising partner and how the algorithm was reading their customers. And all of a sudden, the customer acquisition costs went through the roof and the stock basically fell from what I thought was a already cheap level of 32 down to $10.75 or so. And you could see that massive drop on the stock, on the chart that we posted. Now, to answer the question, what happened was all the support levels were completely devastated, and the stock was looking for new lows where supply came back online. So new information, new levels of supply and demand, right? Now here's what Monkey did. And this is why I want to talk your ear off just a little bit. I think this is a perfect sort of hands-on modeling for how I invest. So let me walk you through the process. And interrupt me, Badge, at any time that you feel you have a good question. This is one of these stocks that I got curious about it some months ago. I did my first level of research. I read the slide decks. I learned about the company. And I said, oh, this is interesting. This is like a makeup company that's expanding into different, different segments. So away from just makeup to wellness products to actual dermatological cures for skin conditions, with a fourth brand coming online. They have a AI lab. I was like, oh, interesting. I'm not a makeup guy, but I see the business as like makeup is a worldwide thing, right? I see a lot of potential. So that was step one. Then, using my charts and arrows and squigglies, you could see my first banana purchase was around $36 a share. And I bought that specifically at that moment because at that time, that was where I saw the supply coming online. And given the strength of the fundamentals, I was like, this is a great value no matter what happens at this point. And then what happened after that is, it turns out it dropped even further. So I was wrong. The technicals did not say bear their weight. I felt satisfied though, making that initial, I call it nibble position, right? But, and I said this to patrons, I did not yet go big because the chart did not warrant it. There was no upward momentum turn. So I was sitting on my hands, patient, just watching.
So here's the question. So bring it to life in terms of like the percentage allocation in your portfolio. So in your King of the Jungle portfolio, when you want that nibble position, like is that like, 0.1% allocation, or what does it look like?
Yeah, it was small. I mean, I bought one share and, so that was $36. Yeah, so it was under 1%. Yeah, by far. So it was intended to be, put it on the radar, good value, right? Then technicals actually got a little worse. So I withheld. I wasn't going to, this is the mistake people make. Oh, it's even cheaper, right? But the technicals did not support buying again. So I waited. And then what happened was the events of last week, and why I'm now, why I spent many of my previous days looking even deeper, because the stock sells off. You could see it on the chart, right? Drops massively. I think in total, like 70%. And I came to the conclusion that this is a short-term-ish problem, technical in nature, that will be resolved. Then, a few days after that, the CEO actually buys a bunch of shares. Plus, they also have $100 million in share buyback program. So I said, with these kinds of, call it confirmations, I started using the technicals again to the positive. And you could see that I actually drew two, if you zoom in on your YouTubes, I actually drew two pink lines. So you could see two pink lines that are the volume average weighted price. And this is what I teach in the Options University course. This is the most accurate indicator of exactly where the buying and selling pressure is. And so when that indicator, when the price actually started moving above the lows, that told me at least in that moment, that now this is where the buyers are legitimately showing up. So I had my first, call it, technical reason to say this, if I really believe the fundamental story, would be the perfect place to get aggressive because the momentum shifted. So I bought my first call option. I bought a call option expiring in October at a strike price of $15. I'm actually going to make a video about this, by the way. I just haven't gotten around to it, so I'll get into more of the details. But then the next thing happened. That was still risky. That was still, if you look at this chart, that's still, you could see the price was going above the bottom pink line, but it was still below the second pink line, which is connected to the day of the big drop. But now, officially, that second pink line has been breached. And that tells me now, for those who are less risk averse, that the buying pressure is now legitimately visible. And so even though I'm now sitting on like 30% gains from that buy on the low, but again, that was still risky. Anybody interested in this story now has a much safer point of entry because the technicals from the lows are in their favor. So that's kind of, so I talked about how I got interested. I talked about studying the fundamentals. I talked about now using the charts, right? And how they help me make this options decision. But the fourth part remains, which I think is maybe the fun part. We don't talk about this much, right? But now that I'm getting heavier invested, I guess Oddity now, because I bought the options badge, I guess that makes it my sixth largest position in King of the Jungle, because that one option is now close to $400 or so in value. I'm like, I now am bumping this company to the call it the top ranks of my, I gotta really know this thing inside and out. So you know what I did? I bought me some stuff. I'm getting research. I have not actually opened this box yet.
Oh.
So
you're doing unboxing videos are popular on YouTube. We do one of those.
So we'll make a segment of this. So this is perfect for Monkey because their brand is called Spoiled Child.
Cool.
And what is Monkey if not a spoiled primate? So this is badge what I got me. I'm gonna test one of their products. And what do I get? I got me, this is what I guess what it looks like, Spoiled Child. And this is, if you could read that.
The power of collagen.
So what's the promise here? What's Monkey gonna do? He's gonna have more beautiful skin, minimizes the wrinkles. I've been noticing, look at these things creeping in, right? So the wrinkles will be gone. I'm gonna have a healthy body. My joints and bones are no longer gonna creak. My hair is gonna be glowing and my nail growth, great. My toenail in jiu-jitsu, so that'll get healed. And I'm gonna have amazing gut health. Who doesn't want all of that, right?
Miracle cure. Okay.
And let's see what else we got. It seems like look at this. A shot glass with which to take the collagen, apparently.
Okay. All right. Well, you're just drinking raw collagen. What the hell? I'm becoming more skeptical about this company as you open this box.
And I guess we have what is this? Oh yeah, and it's in a little mango flavor extract.
Mango collagen. All right. Look, we'll be monitoring you. Now, with your new fancy camera, we'll be able to see the glowingness of your fur and your skin over the next few weeks.
Yes, indeed. So anyway, but in the investing, in the investing round trip, I think that kind of summarizes a pretty good how I do things. Research, take a nibble, watch the valuations, learn, then strike when there's a real potential asymmetric gap, continue learning by getting serious. about.
Yeah. And like, just to say it clearly, like your research process isn't just looking at slide decks and listening to other podcasts and like earning the calls. It's actually becoming a customer of the company, like buying its products, using its services. And that might be like anecdotal experience, but it's still incredibly valuable because then you've got your finger on the pulse of what this company is actually doing.
Yeah, there's that. This is Peter Lynch's Playbook, by the way. For those of you who have not read that, it's a great introductory book. But you know what else I discovered, Badge? This is maybe where the real alpha lies in. I don't know how you feel about this, but because I did this for experimental reasons, I signed up, I put my email in and I put my phone number in because they gave me a 20% discount or something. And I've noticed that their marketing tactics are very aggressive. Like, I'm getting several messages on my via text now. I'm getting a bunch of emails. And I suppose for some people that would be a turnoff. Like, for me, that is a legitimate turnoff. But I wonder, if the crisis is in fact, the finding customers, keeping not keeping because they have a good retention rate. But I wonder to what extent this is actually a good sign. If you're selling, what do you think?
Yeah, like if I remember your summary of the problem they had, it was because like the meta algorithm changed and then suddenly like their cost of customer acquisition went through the roof and like the whole, like the business model suddenly was looking in jeopardy. Like, was it profitable? So, you are a customer, so they don't have to acquire you. They don't want to lose you as a customer. But they can direct market to you. And like I'd find it a bit squirmy if like companies I was a user of were sending me like SMS messages. That would be like, what the hell? Like, get off that channel.
Well, I signed up for it to,
Yeah, totally. Yeah. So, but as an investor, maybe that is you're not just a customer, you're a customer and you're an investor. So you probably need to stay signed up to that stuff just to see what it all feels like. And it helps inform your view of that specific problem they had.
Right. That's what I'm saying. Knowing how aggressive they are in their marketing, as a person, I don't like that. But because this was free for me, by the way, I didn't mention this. This is their model. This is why I didn't pay for any of this yet. This is why this is the whole thesis. It's a try. They have the try before you buy. Then all of a sudden that got demoted as a good strategy by Meta. But in fact, most of their customers that try actually end up customers for the long term because I think they are so aggressive in, and this is the weird thing. This is a whole nother tangent, but during the Motley Fool days of like the peak, what I call peak Motley Fool days, the way they would market their services to people, I thought was so over the top aggressive and bizarre, like 20-page long emails about, but apparently it's an it's an effective thing, sort of like thumbnails on YouTube, stupid faces get people to watch it. This is kind of giving me a little bit of that flavor. Like, okay, I want my company to do this because, if it's going to create more buck. So I don't know. I guess I'm a little bit ambivalent, but I appreciate what they're trying to do. So I have a little more hands-on confidence.
Like ultimately, it's going to come down to the effectiveness of the products, right? Whether they, even if they don't make your skin glowier and your fur like glossier, if you feel like that might be the case, even if objectively, if put a spectrometer to your face and there's no difference, if you feel like they're making you look better, which might be like placebo effect, then the company will probably be successful. Or some part of that is like the marketing and the shot glass and the mango, gunk. And if you feel, and if you feel like actually these products are doing nothing for me, then the company's probably going to be unsuccessful because, customers won't hang around long enough.
Hey, Badge, I'm going to roll into Vegas with diamonds and gold. Everything's going to be glowing, and then that's going to make you buy shares in space ticker ODD, the next coming. But anyway, I'm excited. Check out our Patreon for the video I'm going to record soonish about the more specific details on how I chose this particular option contract, which so far so good.
All right, very good. Well, look, we're up on an hour. Maybe we should wrap it up here, but there is you dropped a really cool graphic into the show notes, and I think we should do justice to it and pick it up in next week's episode 124. But I would like to talk about your framework you shared for the different valleys of death that companies face as they go from an idea through to full on commercialization and profitability. So let's explore that next week.
Yeah, that's a nice preview teaser for our listeners. So Badge, I guess a shout out to all our patrons. That community continues to astound me with its insights and its camaraderie. Check us out at patreon.com/Wall Street Wildlife. Our friends at Fiscal AI, why don't you tell our listeners about them?
Yeah, I drew my Bitcoin versus gold graphic today with Fiscal.ai. They're improving the platform rapidly. I've seen some really exciting tweets from their founder Braden on X about a whole bunch of product capabilities. The platform is getting better and better week by week almost. But already, for some time, it's been my one-stop shop for financial data. The company-specific segment and KPI data I find invaluable. Saves me digging into earnings reports to I used to have to draw my own charts and plot my own data of, I don't know, Tesla, Model Y sales or whatever. It wasn't that, it was some other stuff. Fiscal.ai do it all for you. If you sign up with our affiliate link, fiscal.ai/wildlife, you'll get 2 weeks free of Fiscal Pro. Don't even need a credit card, and a 15% discount if you upgrade. So yeah, go check it out. Fiscal.ai/wildlife.
Badge, are we ready to become beasts of investors?
Handsome, collagen, glowing beasts. Our journey starts here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.